Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Hey, thanks for having me, Jim.
Chris, is there a lot of action in the bond market now?
There is. We're starting to see some interesting price action. It's obviously been out of favor and under a little bit of pressure the last few weeks or the last month, really. But the price has come down in a nice ABC correction, a three-wave. It's reached a support level on the chart as of more or less this morning, and we're starting to see the market bounce, the bond market bounce. And the way it got here over the last 4 trading sessions is with some pretty big price volatility. So we're seeing some gaps, we're seeing strong intraday swings, in big volume. And all these things typically tip that kind of hand to say, hey, this is most likely a turning point. The bulls and bears are struggling and fighting each other here. And the fact that we are still in a long-term uptrend in bonds, it's at support, and all these characteristics on the chart are popping up, we should start to see bonds rally, which means the equities market may fall into a little bit of a correction and out of favor for a little bit. So I like the bond market here. We could see other safe havens start to outperform soon as well.
The Fed said it wasn't going to raise interest rates probably for the next 5 years, but in reality, isn't it the international bond market that sets interest rates, and the Fed doesn't have any control over that?
Yeah, it's going to be real interesting how it plays. I mean, it's really tough to see a huge rally in bonds here. I mean, you've got to wonder, like, how low are rates going to go? If they continue to go higher, are we going to start to see negative rates? I mean, I just saw a report there last night that someone was predicting negative 1.25% interest rates in the States by pretty much this time next year. And it's, the bond market's interesting. It's been in this, like, 30-year bull market, and now it feels like it's getting a little frothy. Rates are almost zero. How much higher can bonds go? Is this bull market almost over with the dollar potentially starting to devalue and all the printing and the damage being done? I mean, it's going to be really interesting in the next few years what the bond market does. It may not be a safe haven. It could actually be falling out of favor long term here if people don't want to carry and hold that debt and really make no money on it anyway. So it's going to be an interesting picture. I don't know where rates are going to go, but I do think we're going to see bonds rally. Most likely rates are going to pull back. And it's just, what kind of demand do we keep seeing in bonds? I know the last auction was terrible demand, and I think it could continue to get worse. So I think bonds could be nearing their last legs for really being kind of a safe haven in the States.
Now, of course, who's going to buy a negative interest bond?
Yeah, I don't know. That's a good question. It's hard to wrap your head around it. So, I mean, I know the U.S., they're saying that they're not going to let it go negative, but who knows? I mean, anything can happen, and rules change, and we'll see. I mean, that's the problem. If they start to go negative, I mean, you're not going to want to hold them at all. You're going to want to move to, bonds could easily be replaced with precious metals, could be replaced with gold. And I think it already kind of has started. We're seeing bonds move down, metals move up, the currency's under pressure. So the safe haven of bonds could totally be replaced with gold, with what's going on. I think we're in the infancy stage of gold potentially coming back and shining as a global kind of currency or asset or store of wealth. So it's going to be very interesting the next 3 or 4 years what happens with bonds and precious metals and really, obviously, everything that's kind of happening around the world. This is pretty unique times, that is for sure.
Well, if we have zero or negative interest rates, would banks, to encourage people to still deposit with them, say, okay, instead of your deposit earning interest here, we'll give you so much gold if you put your money in, and you'll have gold being held there? Or do you still think there'll be a separation between precious metal storers and money storers?
Yeah, that's a good question. I can't see people trusting the banks to say, hey, we've got gold. I mean, all we hear are conspiracy theories that there's not enough gold even for the gold ETF, and that, Fort Knox doesn't have all the metals that it's supposed to. And there's just, and the banking system's supposed to hold our money and keep it safe. And what do? They take it, they leverage it, they lose it. And then, they let all the little guys kind of lose, and America and the economy lose because they have to get funded back. So people don't really trust the system, the financial system. I think metals and their storage is going to be outside of the banking system, because really the banking system seems to just be a bunch of crooks, more or less. I mean, that's just the way it works. Or people who don't know how to run and manage businesses. You don't take somebody's money and leverage it and lose it. So it's going to be interesting. And I think that's why metals and gold has been the leader through all of this. I mean, it's been in a bull market since for like 11 or 12 months already. And so people have been moving in. I'm a strong believer that, I like silver a lot, but gold to me is still the global reserve safe haven when things get ugly. And that it's proving to still be that. Silver may catch up, but I mean, gold, definitely more people are interested in buying gold because they know about it more than the average Joe knows about silver. So I like gold a lot. I think bonds are going to do well over the next few weeks, but longer term, I have my doubts with what the U.S. bond market is, how it's going to perform.
I also saw an article where junk bonds in the U.S., even for companies that plan to go bankrupt, were going crazy. Does that scare people away from bonds?
Yeah, I mean, this whole market, I mean, everyone's on tilt, and everyone's doing things, is shuffling their money around in such weird ways. It's just giant kind of panic, and people don't understand what's going on, and it's just scary how much money people are throwing at stuff that make absolutely no sense. I mean, I guess there's probably a counter argument to that. I mean, if the Fed is talking about buying up corporate debt to support these companies, obviously, those companies are probably going to not have debt issues because they're going to get funded. But, I mean, the high yield or the bond market, I mean, that's where you're going to get your highest yield, way better than the other bond market than treasury bonds. So I see why people are going there. But I mean, you're still buying high risk stuff, and, right now, people are just looking for return on their capital, so they're moving their money to wherever that is, and they don't really, I don't think too much about the risk on the other side when things turn around. Those are going to be the fastest to rise or the fastest to fall in most cases. So it's going to be a nerve-wracking time if and when this market kind of starts to deflate and lose some steam here.
We'll have more with Chris Vermeulen right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, do you think market correction is around the corner?
I do. I mean, I've thought it's been one around the corner for a few months here. We're not betting against it. We're kind of waiting for a sign of a reversal. We're long a couple different plays to the upside, and the market most definitely frothy, very light volume. All kinds of mixed signals are flashing here. I mean, we're seeing the stock market rally while the VIX spikes, 15 or 20%. We've seen this happen a few times over the last week. That hasn't happened since 1999, the tech bubble, which is very, very interesting. And so I feel like we're at that kind of euphoric bubble phase, and I think a lot of others do, that this is just a big euphoric kind of surge of money moving in, a lot of new investors. When you look at the put-call ratio, people buying leverage options, they continue to buy call options hand over fist, leveraging their account to the upside, expecting prices to just continue to go higher. This level, on average, based on the opening price of the total put-call ratio, is the same level we hit in 2020. The market fell 20%. The time before that had happened was in 2007, just before the market topped, for a 57% correction in the stock market. So there's some big warning signs out there, but we are in a bubble. Bubbles you never know how high and how far they're going to go and how long. So you really just kind of have to prepare that when things do roll over, you need to get out, protect yourself, gauge the correction. Is it a correction or is it the start of a drop? Once you can analyze that over a few days or a couple of weeks, then you can figure out, okay, I'm going to get back into the stock market. That was a correction. Or I'm actually going to start to look to take advantage of falling prices because this is a new trend in a down direction. So we're really going to have to analyze when the next correction happens or a pullback happens. What is it, bullish or bearish? And then look at all the different asset classes, what they're doing and saying, and then we can get involved because I think there's some huge opportunity, more opportunity just around the corner, and it's going to be pretty violent.
Is the market likely to keep rising at least until November because the Fed is going to just throw everything they can in pre-election?
Well, I do think it's going to continue to go higher. I mean, I still think there's another potentially 8 or 9% in the upside on the S&P 500 and potentially the NASDAQ still to the upside. I do think we're going to have some type of pullback, whether it's a 2 or 3 day pullback like we saw back in June, where the market fell 10% over just a few days, and then continues to keep on going up to these higher targets. Or do we continue to slow grind higher and higher with no market correction? Who knows how we're going to get there, but I do feel like a correction is going to come. And at this point, a pullback will still be a buying opportunity, but it could be short-lived, and we really need to analyze when that pullback happens. What are the other asset classes doing, and how is the chart playing out? Because we're really close to what I think is a major market top for long-term investors.
We'll have more with Chris Vermeulen right after this.
Value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, do you expect any action in oil?
Oil has been building up a lot of pressure to the upside. There was a time back on the chart in March, which is the $43.50 and $44 per barrel level, based on the continuous contract. And we've seen oil bumping its head on that since August 5th. And it's working its way, squeezing up under that level. It's been a point where I've been telling subscribers that if it can blow through this $43.50 to $44 with I think it's going to be a kind of a big short squeeze. We're going to see it pop, and then I think we're going to see it reverse and collapse in price. I think it'll be a reversal sign to play the downside in crude. I think there's more downside potential here than upside for crude. looking forward, 2 or 3 weeks, depending on when they can kind of have this exhaustion top. I think we're going to get a pop and drop type of play. And then I think it's going to continue to go lower. So I like that play. Gold miners and the precious metal sector today are actually doing something a little similar to that, where we saw gold miners yesterday close right at a trend line resistance. They've been forming this beautiful bull flag, flagging out sideways. Yesterday they closed right at their trend line, and a lot of people were talking about it. And a breakout and a close above that level is very bullish. We can see up to a 30% run in GDXJ, the gold miner junior ETF. But I was telling subscribers this morning, we need to see how the opening bell and how today's price reacts, because a lot of people piled into gold miners this morning, seeing yesterday's close. There's a lot of people anticipating metals to move higher. And so the gold miners ETFs opened sharply higher this morning, and it's been nothing but selling. The GDX is down almost 2%, GDXJ down 1.6. It's putting in a reversal top, which is pointing to lower prices over the next 3 or 4 days. And it's that same type of pattern I'm actually looking for in crude oil. We're going to see some big gap to the upside or a huge rally one day, and then the next day we see a big reversal and a sell-off. So I think there's opportunities in both these sectors. We're just got to let them shake themselves out of it, give us the setup, and I think we could have a couple really good trade setups once we get confirmation of these new trades.
Natural gas, does it really run in a seasonal pattern, goes up when we have hot weather in the summer when people are running air conditioning? Then you have the shoulder season, the fall, when it's not hot or cold, and then cold weather in the winter.
Yeah, typically natural gas is seasonal. I mean, you can run seasonality charts on almost all asset classes, and you can find when they perform and underperform. And we're coming into a time when natural gas tends to firm up. It gets ready for winter. It's almost like everyone kind of front runs it. But there's a lot of stuff going on, as you and I discussed before the show today, that could definitely benefit natural gas and create a lot more demand, which Hurricane Laura has closed down a lot of facilities, damaged. So there's going to be a shortage of natural gas, so it could be more expensive temporarily. Talking about coal mines closing down, converting over to natural gas, those will be huge users of natural gas. And when I look at long-term charts and zoom way back to really 2007, 2005, we're huge cycles at play here, and they're slowly expanding and getting larger and larger in terms of how many years are between them. But we're on a 4-year major cycle low that was put in, and it looks like it's now started to the upside, meaning natural gas should be in favor for the next 1 to 2 years to the upside. And usually somewhere in there we see a huge spike in natural gas value, typically not for another year or so from now based on the past cycles. But natural gas is really interesting, and there could be this huge dynamic shift if the U.S. is moving from coal, closing down plants, moving to natural gas. It could be a massive user and could create some huge spike in natural gas futures down the road when more things get online, and we'll see how that unfolds. But natural gas is really interesting, but it's extremely difficult to trade as a short-term trader because the ETFs are not designed for you to buy and hold them. They value kind of like an option every day, every week. Even if the commodity moves in your favor, you can still actually lose value. So natural gas is really interesting. Very tough to trade.
Anything going on with Bitcoin?
Well, Bitcoin's had a little bit of a pop lately. It's up 2.5% this morning or today, I guess, and it's still holding up in its bullish formation. It broke out of that bull flag you and I talked about a month and a half ago, and the upside target for where it's headed is 14,000, which is the high it hit back in I think it was May or June of last year, and that's a 100% measured move based on the pattern we saw form this year. So there's still more upside. It's at 12,100 today, so it has about $2,000 upside potential if it can continue to finish this pattern. So it looks good here. It's going to be really interesting to see how it performs when the stock market sells off, because recently we've been seeing Bitcoin sell off with the stock market. A lot of things seem to be linked to the stock market. But it may be turning a corner where it's becoming a safe haven because the dollar is finally losing a lot of value and fairly quickly, that people are starting, I think, to panic. And that's why we're seeing Bitcoin pick up speed here and hold its ground. Is people are trying to be defensive with their money, and they're trying to find areas to put it. Bitcoin is one of them, but it's not something you want to put all your money in because there's still huge risk owning it, potentially losing it, all that stuff that comes with cryptocurrencies.
Chris, thank you so much for chatting with us.
Hey, thanks for having me on the show, Jim.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.